In this video, I'm going to go over how a realtor can save money in taxes by starting an S corporation and setting up proper bookkeeping and getting on payroll. And I'm using a real estate agent for this example, but this could also be applied to small business owner. Let's get into it. The first thing I want to talk about is the cash flow problem. And the cash flow problem is actually one of the major problems that real estate agents have, that they come in and they present with, I'm paying too much in taxes. And that's their main concern, is I'm paying too much in taxes. But their other major problem is cash flow. And they have that problem for a couple reasons. So the cash flow problem is partly caused because their income's coming in sporadically. So if you're a real estate agent, you might be making big commission checks, especially here in the Bay Area, Santa Cruz, California, of $40,000, $50,000 or more per house that you're selling. And so you're getting a big commission check, and then maybe a month or two down the line, you get another one. And maybe you're getting paid, your first commission check for the year came in April, and then you're making money, commission checks through, let's say, October, and then it just goes quiet for you for the rest of the time. And by the time you get to filing your taxes, you haven't saved anything for taxes, or very little, and you don't have any bookkeeping. Your books are out, not kept up if you're even keeping bookkeeping, and so you opt to go on extension, knowing you're going to have to pay penalties and whatnot, but you think to yourself, I will be making a lot of money this summer, and so then I can pay the taxes when I get around to it later in the year. And you put it off, you end up approaching October, the extension deadline, and then you finally pull, okay, I have to handle this. And you pull all your bank statements and your credit card statements and everything, and you start scouring through everything to find your deductions, and everything's a mess. And you finally get everything to your tax return, or to your tax preparer, and it's October 1st. And now it's close to the deadline by the time they get ready to file it. And then you finally find out what the tax bill is, and it's significantly larger than you thought it was going to be, and you don't have the cash to pay it. So this is typical, and this happens to realtors, and specifically because of the nature of their business, and because they don't have any formal bookkeeping set up, and it's a real problem. I've seen realtors get into a position where they've had to refinance their homes in order to pay the taxes from the prior year, and it just gets ugly. And here's an illustration of that. And then, so what your relationship is with your CPA is that they're slow to respond. They're really just handling the taxes once a year. So you only speak with them when it's time to do your tax return. You have very little other communication. And then you didn't do any tax planning because in the prior year you're filing in October, and so then it's 2 months down the line. You're not thinking about the year that you're in. It's slowed down. You're thinking about making money next year, and you start the cycle all over again. And so then you have this feeling that my CPA is not offering solutions, and I know that I'm probably paying too much in taxes. It's also because your CPA probably has anywhere from 200 to 600 clients, and you get lost in the mix. So what's the solution? And this is a solution to pay less in taxes, and we'll go over that first, is to create an S corporation. And this makes sense. For this example, this person's Tony the taxpayer. We'll use him as our trusted taxpayer, and he's a realtor in Santa Cruz, and he's single. He doesn't own his own home, to make it simple, so he's filing the standard deduction. And Tony had $50,000 in expenses, and he netted $150,000 in self-employment income. So this is his situation, and we're going to set Tony up on an S corporation and see how much he can save. So here's the tax savings. Here's the high level. And as a self-employed individual, he's going to pay $17K on that $150,000 in profit in income taxes. But his larger piece of his tax bill is Social Security and Medicare taxes, also known as self-employment taxes. He's going to pay $21,000 roughly in self-employment taxes. And his California income taxes is $9,000 on the $150,000 in income. So his total taxes paid when you add it all up is $47,000 on $150,000 in profit, net self-employment income. So then Tony gets set up on an S corporation. He pays and has the S corporation created, ideally in January. And he moves everything over to the S corporation, tells his real estate office, start paying this S corporation. And as part of the S corporation, his CPA sets him up with $40K reasonable salary. And this is on payroll. And then he takes out $110K in profit. He can take that out as distributions or leave it in the corporate bank account. Regardless, he's going to be taxed on the full $150, but the $40,000 is going to be subject to this Social Security and Medicare taxes, where the $110,000 is only going to be subject to this income taxes. So that's how the S corporation splits and parses the income out so that he pays less in taxes. So after all of this, it's $36K in taxes, and this includes the self-employment or the Social Security and Medicare that he paid on this $40K. When you add it all up, he's at $36K. So his annual savings from the S corporation is going to be around $11,000. And this is the tax savings. This is only the tax savings, because what's going to eat into this is the additional filing fees for the S corporation. A CPA may charge anywhere from $1,000 to $2,000 to prepare your S corporation tax return. And then you also should have formal bookkeeping set up. So you should have had it set up as a self-employed individual, but definitely if you move over to a S corporation, you need to have formal bookkeeping set up. So you're probably going to spend anywhere around $80 a month between QuickBooks bookkeeping and then the payroll additional to keep track of your books. And the creating the entity, that's probably roughly about $1,000. And then if you're paying somebody else for bookkeeping or something like that's also going to eat in this, or if you're doing it yourself, then there's a little bit of a learning curve, but that is an option. And then it would also eat into this. But again, the tax savings is probably anywhere from $6,000 to $8,000 a year with these numbers. So where you wouldn't want to create an S corporation, where the break-even point is if you're making net $70,000 a year, $80,000 a year, then you might just decide to stay as self-employed just because it's easier to maintain. There's one tax return, it's what you're used to. But if you start if you're netting $150K in profit year over year or more, then this is definitely something you're going to want to consider doing. So I'll pull up a 2-year comparison of what this looks like for the tax return, and then we will go over that quickly. This is using tax software, and this is the example. This is what it would look like if they were self-employed for 2023, making $150,000, and the numbers work out to, here's the $17,000 in income taxes, here's the $21,000 in self-employment taxes, with a net of $38,000 to the federal government and another almost $9,000 to California. And then with the S corporation, now you have $40,000 in wages, $110,000 in profit coming through your K-1 form, and then you're ending up with a tax bill of $20,000 to the IRS, and then $9,800 to California. And then the other thing to note here is the $40,000 again is subject to payroll taxes. These are the same rates. You're just paying both sides of it as the employer and the employee, but you're going to end up with roughly 15.3% to Medicare and Social Security. This is the rough example of the tax savings from doing an S corporation. Here's why you need help. Again, the S corporation tax returns $1,000 to $2,000. I charge $1,500. Different CPAs charge different amounts. It also depends on the size of the business and complexity. It also depends on what your bookkeeping looks like. Generally, if they're handling your books, then you might pay less than if you are keeping track of stuff in a spreadsheet and it's messy and it's hard to make sense of. Because really it's based on the amount of time that it takes to prepare the return. You also need to be on payroll, and QuickBooks payroll is a simple option. Gusto is another option for maintaining payroll on a budget. So what makes sense on the CPA side, and maybe something that makes sense to get involved with, is finding a CPA that can set you up on a monthly subscription. And the reason that a monthly subscription can be a powerful way of solving this issue is because it allows you to go out and make money doing what you know how to do, which is sell real estate, and leave the bookkeeping and taxes to the professionals. And so you get on a monthly fee, set up 401k, and then build everything into that monthly fee so that the yearly taxes is covered in there, and also bookkeeping and also some advisory. And then this way the CPA can keep track of your tax return. They have a mock tax return going as you earn money so that you can anticipate what to expect throughout the year. And maybe you're meeting with the CPA a couple times a year. They're also providing monthly reports for your bookkeeping to show your profit and loss, so you're more on top of this stuff. And then now you're paying into retirement, and you're starting to look at other ways of saving money, different deductions like buying a new car and those sorts of things before year end, and setting up health insurance through a group plan and all these sorts of things. So thanks for listening, and I hope you learned something.